Welcome back to This Week in Finance. I'm so glad you are here. This is your Monday stock picks video, the show where every single week we break down the top stock picks for the week ahead. We give you a mix of well-known mega caps and lesser-known names with serious upside potential. Today we are talking about the picks for the week of May 4th through May 8th, 2026. We have a packed week ahead with major earnings, key economic data, and a market sitting at fresh all-time highs. Let's get into it. Before we dive in, the standard but important reminder, everything you hear on this channel is for educational and informational purposes only. It is not financial advice. Investing carries real risk and you can lose money. Always do your own research and consult with a licensed financial professional before making any investment decisions. Now let's get to the picks. First, let's set the stage. Markets enter this week with massive momentum. The S&P 500 closed Friday at 7,230.12, a fresh all-time high. The Nasdaq Composite closed at 25,114.44, also a new record, crossing 25,000 for the first time ever. April was the best month for stocks since 2020. 84% of S&P 500 companies that have reported earnings so far have beaten expectations, with aggregate earnings coming in 20.7% above consensus. That is a powerful tailwind heading into this week. But here's the catch you need to know. Market breadth, the percentage of stocks actually participating in this rally, has dropped to the narrowest level since the dot-com era. That means most of the gains are concentrated in a handful of mega-cap AI names. Historically, that has been a warning sign before a correction. So while the picks I'm about to give you are strong, position the size accordingly and do not overcommit. Now let's talk about the major catalysts driving this week. Monday, May 4th, Palantir reports earnings after the close. Tuesday, AMD and Pfizer report. Wednesday, Disney reports. Thursday brings ISM services data. And Friday is the main event, the April jobs report. The consensus expects 49,000 jobs added with unemployment at 4.3%. Any surprise in either direction will move the entire market. With that backdrop, let's get into the picks. I am going to give you 10 names this week, broken into 3 categories. First, mega-cap mainstays. Second, mid-cap momentum names. Third, lesser known under the radar plays with serious upside. Let's start with the mega caps. Pick number 1, Alphabet, ticker Google. This is your highest conviction pick this week. Alphabet just had its best month since 2004, the year of its IPO. The stock exploded 10% after earnings last week. Their cloud business grew 63% year over year, crushing the 47% estimate. With cloud now monetizing AI investments, Alphabet has clear differentiation versus Meta and Microsoft. Watch for any pullback to the 4.8 to 4.90 level as a potential entry. Wall Street's 12-month price target consensus implies meaningful additional upside. Pick number 2, Apple, ticker AAPL. Apple delivered a clean earnings beat Thursday after the close, with revenue, earnings, and forward guidance all above expectations. The stock jumped more than 3% Friday and is on track for its first record close since December 2nd. The key technical level to watch is $278 to $280. Hold above that, and the breakout to new all-time highs is alive. Apple's strength in China and the new iPhone cycle make this a high-quality position into the back half of 2026. Pick number 3, Caterpillar, ticker ACEHAT. Caterpillar popped nearly 10% on Thursday after a blowout earnings report and raised annual revenue guidance. As a global economic bellwether, Caterpillar is benefiting massively from the AI infrastructure build-out, including data center construction, power grid expansion, and industrial demand. The stock is up over 40% year-to-date and over 160% over the past year. Momentum is real here. Now let's move to mid-cap momentum names. These are stocks with strong recent moves and clear catalysts. Pick number 4, Texas Instruments, ticker TXN. Texas Instruments is a backbone of the semiconductor industry and is benefiting from AI demand alongside continued strength in industrial and automotive chips. Zacks has it as a strong buy heading into May. Earnings have been steady, the dividend is reliable at over 3% yield, and analyst revisions have been moving higher. Pick number 5, Onto Innovation, ticker ON2. This is a name many investors do not know but should. Onto Innovation makes inspection and metrology equipment for semiconductor manufacturing, specifically advanced packaging, which is critical for AI chips. They expect advanced packaging sales to grow more than 30% in 2026, expected revenue growth of 27%, and earnings growth of 36% for the current year. The Zacks earnings estimate has been raised 4.8% in the last 30 days. This is a pure play on the AI chip build-out that gets less attention than NVIDIA or AMD. Pick number 6, Comfort Systems USA, ticker FIX. Another lesser-known name with serious potential. Comfort Systems builds and services mechanical and electrical infrastructure, including everything needed for data center construction and modular cooling systems. As AI data centers explode in number, FIX is one of the picks and shovels plays. Strong earnings momentum and analyst revisions trending higher. This is the kind of name that trades at 20x earnings, while AI megacaps trade at 50x. Now let's get into the lesser known under the radar plays. These are higher risk but higher potential names. Pick number 7, AeroVironment, ticker AVAV. AeroVironment is a defense technology company specializing in unmanned aerial systems and tactical drones. With global defense spending rising, particularly given the ongoing Iran conflict, the company has a strong order backlog and multi-year contract visibility. Clear Street analyst Brian Dobson initiated coverage just last week with a buy rating and a $293 price target. Wall Street consensus is a strong buy, and the average price target implies over 50% upside from current levels. Defense tech is one of the strongest themes in this market. Pick number 8, Atlassian, ticker team. Atlassian makes Jira, Confluence, and Trello the productivity software backbone for software development teams across the enterprise. Wall Street has a strong buy consensus rating with 20 buys and 3 holds. The average price target of $129.86 implies over 55% upside potential. Cloud growth is accelerating, enterprise migrations are strong, and the company is finally turning the corner on monetizing AI features. Pick number 9, Klaviyo, ticker Kvio. This is a smaller cap name with major upside. Klaviyo makes AI-powered marketing software used by e-commerce brands. Morgan Stanley analyst Elizabeth Porter just resumed coverage with a buy rating and a $34 target. The stock currently trades at a steep discount to similar small to mid-cap software peers. Wall Street consensus is a strong buy with 20 buys, and the average target implies 52.8% upside potential. If you want growth at a reasonable price in software, this is a strong setup. Pick number 10, Harmony Biosciences, ticker HRMY, our biotech pick of the week. Harmony specializes in therapies for rare neurological disorders. Market cap around $1.59 billion, trading at a price-to-earnings ratio of just 10.1, which is reasonable for biotech. Analysts expect roughly 42.6% upside based on anticipated product launches and expanding market reach. The company maintains strong debt management and a defensive profile within biotech. For investors looking at the smaller end of healthcare, this is a quality pick with real catalysts. Now let's talk about names to avoid this week. First, Meta, ticker Meta. JP Morgan downgraded Meta from overweight to neutral last week after the company hiked capital expenditure guidance to between $125 and $145 billion. The market is now skeptical of the AI spending without a clear monetization path. Until that narrative changes, expect more pressure. Second, Roblox, ticker RBLX. Roblox crashed 17% on Friday after slashing its full year 2026 bookings guidance. The new age verification and content monitoring features are slowing user growth significantly. Avoid until management gives clarity on the recovery timeline. Third, anything with high oil sensitivity if you believe Iran peace talks succeed this week. Energy stocks are in a strong position right now, but if a deal materializes, expect a sharp pullback in names like Exxon, Chevron, and the broader XLE ETF. Let's wrap this up with a summary. We have 10 picks across 3 risk tiers. Mega caps for stability, Alphabet, Apple, and Caterpillar. Mid-cap momentum, Texas Instruments, Onto Innovation, and Comfort Systems USA. Under the radar, high upside, AeroVironment, Atlassian, Klaviyo, and Harmony Biosciences. And on the avoid list, Meta, Roblox, and oil-sensitive names if peace talks progress. Position sizing matters. Given that market breadth is at .com era narrow levels, do not overcommit to any single name. Spread risk, set stop losses, and remember that even strong picks can have rough weeks if the broader market corrects. Key catalysts this week to watch. Monday Palantir earnings, Tuesday AMD and Pfizer, Wednesday Disney, Thursday ISM Services, Friday the April jobs report. Any of these can move the entire market. If you found value in this video, please do me a favor and hit that like button. It genuinely helps the channel and helps more investors find this content. If you are not subscribed yet, smash that subscribe button and hit the notification bell so you do not miss our Wednesday market pulse for the midweek check-in, our Saturday weekly wrap that recaps the entire week, and our market spotlight deep dives where we go in depth on a specific topic. Drop a comment below and let me know which pick you are watching most closely this week. I read and respond to every comment. As always, do your own research, protect your capital, and we will see you Wednesday for the market pulse. Take care.